Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 14th of November 2021. And we're looking at how gold and silver performed last week, again reaching weekly highs on Friday, and where we expect prices to go this coming week. This is a similar video to our regular weekly update, published yesterday. Let's take a look. Gold rose $47 last week, rising from $1,118 to $1,865, having hit a high of $1,868 and a low of $1,812, a rise of 2.5% and only closing $3 below its week's high. In sterling terms, gold finished the week at £1,390, that's up £43. And in euros, it closed at 1,629 euros. That's up 55 euros. Silver rose $1.13, rising from 24.19 to 25.32, smashing through the psychological resistance level of $25. Having hit a high of 25.39, so it closed at 7 cents lower than its week's high, and a low of 24.04. A rise of 4.7%. In sterling terms, silver closed at £18.88, up 96 pence on the week. And in euros, it closed at 22.12 euros, that's up 1.18 euros. The gold to silver ratio fell from 75.2 to 1 to 73.6 to 1. Bitcoin has risen this past week by $3,053, and currently stands at $63,669. Now looking at the equity markets, the Dow Jones closed on Friday at 36,100. That's up 179 points on the day, but down 227 points on the week. The S&P 500 closed at 4,682, up 33 points on the day, but down 15 points on the week. And the Nasdaq Composite closed at 15,860, up 156 points on the day, and up 362 points on the week. So all major US exchanges were up on Friday, but were mixed as far as the week's rise or fall is concerned. Looking now at oils, Brent crude closed at $82.17, that's down 57 cents on the week, and WTI crude closed at $80.79, down 48 cents on the week. Not surprising in view of the dollar's rise, because we can see that the dollar index now stands at 95.12, and that is up 0.80 points on the week. Now, we concluded last week's video with the following forecast, quote, "So all of the building blocks are in place for stronger gold and silver prices next week, save a strengthening US dollar and alternative asset classes proving more attractive. With this in mind, we expect to see gold trading between 1760 and 1850, with 1735 and 1875 as outliers, and we can see silver trading between 2325 and 2525, with 2275 and 2550 as outliers. Well, we can immediately see that gold traded broadly within our normal range for the earlier part of the week, but then moved into but maintained within our outlier range towards the top on Thursday and Friday. Again, it's quite interesting to note the difference between gold's high and low of $56, particularly so bearing in mind we had some of the worst CPI data for 30 years, which is what gave gold and silver a fillip for Thursday and Friday. Silver did exactly the same thing, broadly traded within our normal range until Thursday, and then moved to near the top of our outlier range for the duration of the week. The difference between silver's high and low for the week was $1.34, which was just over 5%, while gold's difference was 2.5%. We have to add here that if it were not for the very strong showing of the US dollar, with the spot index breaking 95, whereas in recent weeks it seemed to centralize around 94, then the prices of gold and silver would have been a fair bit higher. Now, when we give our forecasts, which incidentally we would argue is some of the most accurate on YouTube, certainly outpacing all of the so-called gurus and most of the investment banks, we take various factors into account, both fundamental and technical analysis, and then overlay them with breaking news and trends. It's a calculation that frankly has only let us down 3 times in 6 years, and that's on a week-by-week basis. Now, gold has psychological support at $1,850 and psychological resistance at $1,900. The technicals, though, suggest slightly different figures. On the resistance side, the June the 1st top at 1922, and the support level being at 1839, with 1814 lying underneath. Silver technically has support at the 10-day moving average of 2430, and resistance at August highs, and also a psychological barrier of $26. What spurred both gold and silver on this past week were the CPI figures mentioned earlier, which were announced on Wednesday, coming in at 0.9% for October, compared with 0.4% in September, and against expectations of 0.6%. We stated last week and during each of our day's morning updates that these were the figures to watch. On Friday, the US announced new job openings for September, which were also disappointing, coming in at 10.4 million, compared with 10.6 million the previous month. The UMich Consumer Sentiment Index fell from 71 in October to 66.8 in November, against expectations of 72. So these factors for the moment are acting as tailwinds for gold and silver. We have to be careful, though, in that they could also act as a tailwind for a further strengthening of the US dollar, which under normal trading conditions in itself act as a headwind to precious metal prices. Looking at the other side of the coin, we're in a sweet spot at the moment, with both the dollar and gold and silver rising, which, should the dollar dip in the next few days ahead for any reason, that will more than likely even allow gold and silver to rise further. Of course, if the dollar strengthens further in the short term, well, then that may not be quite so good. Now, a quick reminder that each morning we produce daily updates expressing the reasons for the various price movements and news which could affect prices that day and for the duration of the week. So please do tune into these. We try and publish them around 11 a.m. GMT. However, occasionally it's later and occasionally it's a little earlier. But if you switch the notification sign on your YouTube video as soon as it's published, you should be notified. Now, before we give our price forecast, let's take a look at the economic data being published in the US next week. And we predict that Tuesday and Thursday are the 2 most important days. On Monday, we have the Empire State Manufacturing Index for November, not to be ignored. On Tuesday, retail sales, import price index, industrial production, and capacity utilization all for October, the retail sales being perhaps the most prominent, and the NAHB Home Builders Index for November. Then on Wednesday, we have building permits and housing starts for October. Then Thursday, the next important day, weekly jobless claims, the Philadelphia Fed Manufacturing Index for November, and leading economic indicators for October. And then Friday, nothing scheduled. So any price action we should see is more than likely going to come after the Tuesday announcements. The retail sales figures will, or should at least, give us a reasonable indication as to whether the economy is still growing or not, and this indeed could impact prices. We have to be mindful of the fact that even if the data we get suggests further tightening of monetary policy, we know nothing is going to happen for many, many months. And although markets tend to look 6 to 12 months ahead, we suspect they're going to go for a final big push before Christmas, certainly for the equity markets, before allowing their concerns to rise to the fore. So once again, as with last week, all of the building blocks are in place for stronger gold and silver prices next week at best, or perhaps a degree of consolidation at worst. There are concerns in Europe about a resurgence of COVID-19 cases, and the UK is also seeing an uptick. There are reports that new lockdowns may be called for, but we're reserving judgment at this stage, as to whether they will actually happen or not. With an eye on Russia and Ukraine, and perhaps assuming nothing is going to happen there, we'll make the following gold and silver price predictions. But if something does occur, then we have to confess in advance our figures will more than likely be blown out of the water. So with this in mind, and assuming no action there, we expect to see gold trade between 1820 and 1910, with 1790 and 1930 as outliers. We see silver trading between 2430 and that psychological resistance level of 26, with 2375 and 2650 as outliers. What do you think? Please do share your thoughts. Tomorrow we'll produce this video but under a different thumbnail and introduction, and we hope and plan also tomorrow to produce a video highlighting some of the more serious effects of inflation on gold and silver prices. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you are notified of our videos as and when they're published, and especially the morning ones too. Finally, we wish you a safe, enjoyable weekend, and as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.